Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast. This is the first podcast that I am doing from my new home office. As you know, if you listen to this podcast, I have been pushed out of my where I was living before, and by these mudslides that happened in Montecito, and then we just ended up moving to a place up in Santa Barbara that sort of away from the action, and the place is big enough. So I just moved the office into the house, and so now I am coming from the home office in Santa Barbara, California. So this is the inaugural show for that. Before we start, I do want to point out a couple things. There is a new wealthformula.com website which you want to check out, and I'd love to hear your comments on it. I think it's pretty cool. And on that, of course, you have the opportunity to still download my book, 7 Secrets of Eternal Wealth, which was an Amazon bestseller and can be yours simply by downloading the PDF format and reading it. And so check that out. Also, would like to give a shout out to our sponsor, American Homeowner Preservation, George Newberry's group, which they are a fantastic business. What they do is they buy failing mortgages for pennies on the dollar, turnaround, and with investor money, buy these from banks and keep people in their homes for a rent-to-own option, or basically a rent-to-own option, renegotiated mortgages for these people, keeps them in their home, makes you money as the investor. Right now it's 12%, but he's going to go down to 10 pretty soon. So if I were you and I was interested, I'd get in now. I've been an investor for a while. Love it. Check it out, ahpfunding.com. Now, as for today's show, I was thinking about this recently. Ray Dalio, legendary hedge fund manager and really overall smart guy. He has a great book out right now, which the name eludes me on, but he's got a great book out there. I think it's Principles. Yeah, Principles. He's been for the last couple of years predicting what he calls a financial winter. And he's been talking about that for the last couple of years. And, he's looking at the same things that I look at and that I talk about on this show, the obvious stuff, near zero interest rates for a decade, lots of money printing, ballooning asset prices, quadrillion-dollar derivative markets. Listen, neither Ray Dalio nor I are doom and gloom guys. We're just not. But what we're talking about are just the facts, or what were the facts at least, because then something happened. You see, America got trumped. The stock market took off again. Asset prices got even fatter. And to top it off, the new tax bill creates the biggest tax cuts for corporations and wealthy individuals since 1986. The result? We ain't going to be seeing winter anytime soon. This is like the financial global warming, right? That is, unless there's some sort of black swan event, like, for example, say a nuclear conflict with North Korea or something like that. And, I was thinking about this, and of course, I'm no Ray Dalio, but great minds think alike, as they say. Ray Dalio was on TV the other day. I saw him, and he echoed the same sentiment. He said, over the next couple of years, that money on the sidelines, sitting on the sidelines, waiting. If you're one of those people, you're going to feel pretty foolish. And I agree with that. You know what? The floodgates just opened up to massive economic growth and optimism. So what am I going to do? Well, I'm investing and trying to find solid opportunities for me and my investor club. I'm never going to sit on the sidelines anyway. Listen, something's always for sale. I've talked about this before. There's always something for sale. Right now, for example, uranium's for sale if you want some. And if you want no correlation with the markets at all, there's always life settlements. And I've talked about that asset class many times if you are still nervous about what's going on. You know what? Ray Dalio was saying that he felt like this whole thing probably is timed out because of interest rates catching up with the explosion probably toward the end of the Trump administration. So that presumably we have a little bit of time here to make hay. But if you're still nervous about it, which I get it, there's still no reason to sit on the sidelines. There's always something either not correlated or for sale. So make sure you get off the sidelines. That's the moral of the story. But I will say that I believe that market exposure, and I'm talking about the equity markets, the things that I don't generally like. I don't think exposure to it is terrible right now. I mean, especially in certain contexts. Now, put double-digit gains in a product like Velocity Plus that we've been talking about that allows you leverage on your gains but no downside, and boom, you're going to make money. I mean, it's just it's a good time to do something like that. Of course, I like protecting my downside, so that's a nice product for that. Anyway, the point is we live in interesting times, and that is actually a Chinese curse. So whether you like it or not, we live in interesting times. So for better or for worse, make it work for you. Now, my guest today, Kenneth Amaduri, has been doing just that as a professional investor and as an entrepreneur for a number of years. And this guy's only 30 years old, has already become a multimillionaire. And he's a guest on this week's Wealth Formula podcast. Make sure to check this out, folks. When we come back, we're going to discuss everything from gold to cryptocurrency and AI. Check it out. We'll be right back. Welcome back to the show, everyone. Today, my guest is Kenneth Amaduri. Kenneth is a smart business guy for sure, and he's been concerned about the flaws in the financial system since an early age. I mean, he's already a young guy as it starts, and that foresight early on led him down the path of investing in alternative assets such as real estate, precious metals, and now cryptocurrency. Sounds a little bit like me. He's also an active entrepreneur, and he's been involved with launching multiple highly successful companies. And his business savvy and investing savvy has resulted in him becoming a multi-millionaire before the age of 30. And to share his knowledge, he's created his own brand called Crush the Street, which produces weekly newsletters, a blog, and a podcast. So it is with great pleasure I introduce to you Kenneth Amaduri to Wealth Formula Podcast. Welcome, Kenneth.
Hey, Buck. Thanks for having me on. Appreciate it.
Yeah, it's great to have you. So, Ken, I got to start out with this one. You're 30 years old. When I was 30, I was a broke neurosurgery resident. I was working about 100 hours per week, making about $35,000 a year. Meanwhile, you're a multi-millionaire. How'd you do that, man? It's great.
Well, hey, it was one of those things, and I didn't grow up wealthy. I had a regular middle class upbringing. My dad worked hard. I was scrubbing toilets at the age of 15 years old just to pay for karate lessons. I mean, I was just that type of guy that if I wanted to do something, I'm going to go out and do it and make it happen. And I think that's the attitude people need to have when they want to achieve something. They need to learn to set a goal and to put themselves up against the wall and to go out there and do it. How many people have goals that just don't follow through or say, oh, I'm going to do that, and then they put it off till next week? And that compounds on itself. And it's all about getting out there and doing it. And honestly, maybe a little fake it till you make it. But, once things start moving, I mean, you got a real chance of making it. That's the difference between people who aren't successful and are. It's really not talent. It's just getting out there in doing it. And I know it sounds cliche, but I mean, having gone through it, having, invested and, been a part of successful startup companies and, just being in the world of finance, it's about doing it, building that expertise, getting out there and building something that turns into something big. And I know it's general, but man, if you talk to other successful people, it's all about action, and you got to be out there.
Yeah, I couldn't agree more. I mean, I think especially when you're talking about, a guy who's 30 years old, when a lot of people think, well, gosh, I'm 30 now, now I can't take any risks anymore. I gotta, I have to stick to my guns. But I mean, that's just one of those things that I think people have very, very short, they're myopic. They don't see that, it just takes a handful of years in order to go from knowing nothing about a field to becoming an expert. I mean, I became I started medical school, and 4 years later, I was speaking the language of being a physician. It's no different for any high-paid professional, any highly educated professional, and how you learn this stuff. And I think you just have to approach it that way, right?
Well, yeah, and when you put yourself out there and start taking, small steps, you don't realize it, but sometimes you have those game changer moments. And that's really the difference between somebody who's actually, making a forward progress in their life and someone who isn't, is these people have a game changer. And as long as you keep making forward progress, you can almost guarantee that moment's going to happen, and you leap forward. And for me, I've had just moments in my life where I had chunks of wealth, flood into my portfolio because of little game changers. And it wasn't that I was anticipating a big move. It was just a lot of repetition and taking steps forward. And that's what I would suggest to people. Make forward progress in your life and anticipate big things, because that happens.
Yeah, I agree. So the more you put yourself out there, the harder you work, the luckier you get. So let me shift gears a little bit, because I know you're a big economy guy. You've got a very good perspective on what's going on in the world and how that affects the different asset classes, etc. Tell me, when you look at 2018, what the world looks like to you, and what do you expect? What do you expect the markets to do?
Yeah, I mean, what a big question, right? We're looking at the stock markets at all-time highs, and Trump has instilled a lot of enthusiasm into the market. And,
right.
I tend to appreciate that. I like that we got Trump instead of Hillary Clinton, and my gosh, what a disaster that would have been with how corrupt she is. And I'm not saying Trump is the most perfect guy. I mean, obviously, you got to cringe a little bit when he starts talking, but man, the market loves it. And hey, I appreciate that. Yeah. And who knows how much confidence he's instilled into entrepreneurs and people with money just because he's in there. He's inspiring the right sort of people to go and invest in the U.S. And, I appreciate that. It's an unintended positive consequence of the Trump economy, as opposed to, let's say, the Obama economy, who got largely welfare recipients and, people that want something from the government excited. Now you have people with money excited about the economy. Having said that, we're looking at a very, a large bubble across many different asset classes. And I agree. We have the stock market at all-time highs. Financialized assets are, really overpriced. And I see a massive potential for a big correction despite the Trump optimism. And the only thing out there that's really undervalued is precious metals. We saw cryptocurrency do very well, and I've been ahead of that. We were covering that largely in 2015, 2016, really hard in 2017, and we positioned ourselves in cryptocurrency, and I think it's going to do great in the longer term. But certainly gold and silver have yet to make their big move. And if we do see that wealth transfer go from financialized assets to hard assets, I think there's going to be a big shift. And I'm excited for what that means for precious metals, because I'm positioned heavily in this market.
Yeah. So let me ask you the question that usually I think of precious metals, particularly gold, as something that investors tend to flock to when they're worried about the equity markets. And when they think that there's trouble in the equity markets, they flock to gold. So if the equity markets are going to continue to fly, which I think they are, I think the Trump tax cuts in particular are the big impetus for the economic growth, for the confidence in the economy that small business has. So knowing that, how does that affect what I think sometimes could be looked at as a more of a protective strategy or a hedging strategy like gold when people are so optimistic?
Well, you got to actually look at what's happening, and I agree with you. The Trump tax cuts are going to be great for the market, and it's going to incentivize a lot of business to come into the U.S. I read some headline in Europe. There's like, oh my gosh, the Trump tax cuts, we're going to lose businesses in Europe to the U.S. And, you kind of scratch your head and go, well, that's kind of the point.
Yeah.
But you know what? As far as what's going on, the dollar has been kind of on a free fall. The U.S. dollar index is an 88 right now, and there's really not much support for the dollar between 88 and 80. We got some support there. And if we see the US dollar continue to weaken and just some trigger points in the economy, it could instill some sort of black swan sort of panic, especially if we see the US dollar get weaker against the Chinese yuan. And we're seeing that happen. And I could see the US dollar going 6-1. And we haven't been that low yet. And that's a problem because China is our number one lender. They've lent us $1.2 trillion. But if the underlying currency, the US dollar, continues to weaken, we're going to lose the incentive, or they're going to lose the incentive to want to own US dollars if the underlying currency is collapsing. And the economy is very dependent on China letting us borrow funds to continue on this credit expansion game. I know I'm kind of talking out both ends of my mouth with the optimism of the Trump inspiration, but the underlying fundamentals are not good. And unfortunately, I think it might end up falling on President Trump here. And, the media, is going to spin that as his fault. And see, it was capitalism and free markets and tax cuts that caused this. When in reality, that's not the fundamentals of what caused this massive bubble that we're facing.
Yeah, it's ultimately it's free money, right? It's interest rates being record lows, near zero for a better part of a decade. And when you put that together with the economic stimulus of the Trump tax plan, what we're looking at is, a real positive for the economy and growth in GDP. And I think I was watching, I actually posted this on social media. It was a great interview with Ray Dalio. And he made the comment, which I think is a good one: if you've got money on the sidelines in the next year or two, you're going to look pretty foolish. And I think that's right. I think that these balloons are balloons. We all recognize that they are balloons, but they're going to continue. I think they're going to continue the bullish trend at least for a few years. The problem becomes when that growth becomes such that that rates start climbing to match it and to prevent inflation. And that's when I think you could have one of these moments where I think the markets could really turn very quickly. And his thought was that, or his projection on this was that, similar to what you said, that look towards the end of the this Trump administration, where those rates are probably going to have to catch up. and that could end up putting the economy into a pretty significant recession. Just in time for re-election, and then you're going to have. I'm not a big. I'll tell you, I'm not a Trump fan. I am. I'm a capitalist. I'm a libertarian, but I have significant issues with him. But I think the worst thing that could happen for the economy in general at that point would be the reaction that comes from the Democratic Party, which would probably be Bernie Sanders. And that could be a big problem.
He's got a good chance of winning.
He does. He does.
I really does. I mean, you look at his support, and I mean, he's just out there. The millennials love him.
Yep.
And he addresses a lot of the problems that are out there in the economy, but his solution is just even more government.
Yeah.
And
no, I agree.
The big disconnect.
I agree, but I think my point being that if you come to a point where the proverbial shit hits the fan. And there's a blame game going on. I think he's going to be the guy. It's not going to be a moderate center, Democrat who's got some fiscal conservatism. It's not going to be I hate to use the word Clinton Democrat because I'm not talking about, there's a lot of baggage that comes with that, but it's not going to be somebody who is center left. It's going to be someone way off to the left. And that's just because I think the populist sentiment out there, you're going to either go with the Trump, you're going to go with the Sanders, you're not going to go in the center. So I think that, to me, that's a real danger in the economy. But in the short term, I agree with you. Things are off the hook. I do think that my feeling on precious metals is that it get positioned and it's cheap. And you talk about not only that, but things like uranium, right? I mean, uranium is tremendously depressed right now, and it's probably the biggest commodity market to, ready to explode. But
absolutely. And if I could jump in there,
sure.
Precious metals. It's faked us out a few times. In 2016, it spiked up to 1350. And, we were all under the impression that, hey, this is the bull market. This is the start of the bull market. And then going into 2017, we saw it pull down into the 1200 range once again. And coming off of the 2011 high of roughly 1900, and then for this 5-year long, 5, 6, 7-year long bear market, the market needs that much more assurance and confirmation that we're going to the upside, especially now that we're at 1350. It looks great, but because of our most recent experience, we need more confirmation. And I really think that's going to happen in the 1400, 1450. Of course, those are higher numbers, and you got to, come in and buy at a higher price if you want to wait till that point. But I don't think there's any risk in buying precious metals now. I don't think it's going to go lower, or at least much lower. In fact, I think that we're getting close to really breaking through any sort of technical barriers that the market has for us. And when we do, we'll have that confidence start to set in. And if you look at cryptocurrencies, that's kind of like buying Bitcoin in 2016 as it was slowly starting to accumulate that stealth rise. Before we had that confirmed upside when everyone was jumping in 2017. And sure, it's going higher. And even the U.S. stock market, we're in that confirmed bull market. Everyone thinks it's going higher and higher and higher. We have this confirmation of a bull market. And so we don't have that yet in precious metals. But I feel like getting positioned now is like that early stage where it starts to move higher before we have that confirmed bull market where everyone wants to jump in. And it's all about being early when it comes to investing. Yeah.
Excuse me. Speaking of cryptocurrency, this is obviously this is an area that, has been a huge part of 2017 in the market. And I think it's going to be a huge part of 18. How do you think that what is the interplay between cryptocurrency investors and, say, precious metal stock investors?
Well, you know what? The good news is there's a lot of overlap.
Yeah.
There's some people fight and they argue, but largely it's the same sort of people that have gotten into cryptocurrency, at least more of the early adopters. question the government.
Yeah.
They question the sustainability of all this debt, the fiat currency system, being a sovereign citizen, being your own bank. And how powerful is that? I mean, we live in the US where there's relative stability, Canada, Europe, there's relative stability. But I mean, you go to South America, the currencies are collapsing. And in Venezuela, the percentage increase or the percentage benefit that somebody gets from having access to cryptocurrency is absolutely huge. You can put your wealth into something like Bitcoin and fly over 10,000 miles away, 5,000 miles away, and have every dollar of wealth with you. And that's a very powerful thing in a place where there's a lot of currency controls. So a lot of the same philosophical reasons why people like precious metals are the same reasons that people like something like Bitcoin. And in some ways, Bitcoin has the best of both worlds in regards to fiat and gold. It's like the best of both worlds, other than the fact that Bitcoin is one of those things that in theory can be replaced by another cryptocurrency. Gold is defined by atoms and elements, and that is absolutely finite. But that shouldn't take away from the value that we've seen move into the cryptocurrency space and how drastically this is going to change things. I just came back from the North American Bitcoin Conference in Miami.
Oh yeah, how was that?
It was really good. There was expected to be 4,000 people there. This is the largest conference that Bitcoin or cryptocurrency has seen, and 6,000 people showed up. Now, maybe that sounds bubblish, like a bubble to many people. And it might be signs that things are getting frothy. But the fact is when you are in an environment where entrepreneurs are incentivized to come up with something and financially incentivized, who knows what is going to rise out of the ashes of the blockchain revolution. And there's so many things that are happening, and it's really, really exciting. I'm very optimistic as to what is to come in this really a brand new frontier.
Yeah, I couldn't agree more. In fact, I'm doing a webinar on cryptocurrency this afternoon, and one of the things I thought was interesting, though, and kind of what I was getting at was, I also play a little bit into the TSX junior mining sector, a little bit, a little speculative play there, and a guy that I follow a fair amount, Marin Katusa, was talking about how he thought that there was a lot of people who play in that TSX market that are overlapped with crypto, and in some regards he thinks that some of the money from junior mining is getting pulled away from crypto investors. And I thought that was kind of fascinating if you think about how different, fundamentally those things are. But from the standpoint of principally, they're highly volatile. They tend to attract, a very libertarian, real asset group, even though a lot of people like to say that crypto assets are not real. There is something about them, a lot of them, that make them more finite, as you said, than fiat and stuff. So it's definitely an interesting play.
I'll tell you this. In 2017, that was largely the year of utility tokens. And that happened on the Ethereum blockchain with all of the ICOs that came out and for different utilities. In 2018, I'm thinking, and this is what I saw at the North American Bitcoin Conference, and you can see what's happening. But in 2018, we're going to see companies tokenize, and there's going to be a way for equity, and this is going to really compete with the TSX and other stock markets when companies are tokenizing their equity. Basically, instead of having shares, you buy a token with a company, and there's other platforms out there that are making it possible for companies to, be AML and KYC compliant. And when you have a blockchain where people have all their tokens, that can be as transparent as you want it to be. And this is, again, a new paradigm for what is to come
Yeah.
When we have tokenized equity, I mean, what are the traditional brokerages going to do? I mean, this is a whole new frontier that people have yet to wrap their minds around.
Yeah.
And yeah, I absolutely agree.
I think
that
there's
the
no
cryptocurrency
question.
space.
There's no question in my mind. It's the end of investment banking as we know it in 2 decades from now, and I think there's just no role for them. You're taking it. You know, there's no role for having investment bankers when you can have. You know, as you know, T0 is a very good, very well-known project. Patrick Byrne from Overstock.com. He's sort of starting this whole thing that ultimately is creating this, setting the foundation for creating this marketplace that would be competing with Wall Street. And then you've got companies like Kodak that it's secure, you know, that are sending out. They're creating tokens as well. So yeah, so now you've got, you know, what exactly is cryptocurrency? What exactly are coins? Well, they're utility tokens, and then there's a second play, which is stocks. So the quicker you can learn about this space, the better. Don't ignore it. I think Kenneth and I would both strongly advocate for that.
Mm-hmm. Absolutely. And I think we might end up talking a little bit about just the changing environment and artificial intelligence and just, you know, how quickly things are changing and how important it is to just be in the know when it comes to information, because that's like that's the commodity of the 21st century. It's going to be information.
Yep. So you mentioned AI. This is an area I don't know very much about at all, other than having some AI type information that I used for cryptocurrency. But talk about AI technology. This is, you know, the big thing you hear about with regard to artificial intelligence is the big question off the bat. You know, is it bad, or is it good or bad for society? Elon Musk thinks that it's going to kill off the human race. I mean, tell us about this. I mean, for those of us who don't know very much about it.
Sure. Yeah, the robots are coming, right?
Yeah.
And, you know, we're in a situation now. Well, the 1900s were a time when machines replaced people's hands. And the 21st century is going to be a time when, you know, computers and machines replace people's brains. And is this a good or bad thing? And one thing I would remind people of is in the 1800s, agriculture was 80% of the U.S. economy at one point, and machines replaced many people, and now only 2% of the jobs in the U.S. are agriculture, and the rest of the 78% are employed elsewhere. And working side by side with these machines, with new operations and new economic lubricant that has gone through society. And I think that's what people need to look at this as and welcome it. Yeah, you know, I know that Elon Musk has said that, and it's kind of interesting. I mean, you know, as far as supercomputers and singularity and how these machines are going to interact with society, and they are getting smarter and they are intelligent. I'll give you an example. Google's AlphaGo AI robot has beat the world's best human at the game Go. And just to give you an idea of how big of a deal this is, the game Go is, you know, think of it as like chess or checkers, but it has more combinations of moves than there are atoms in the world. So there's no way to pre-program every move that this machine would do. Unlike, you know, if you remember Chess Master in the 90s, that game had a pre-programmed move for anything you did, and it would just react to it. But this machine learned. So they had it play itself like 10 million times to the point where it learned how to play the game, and it beat the best human player at that. And that's kind of a scary thing if you think about it, because how smart can these machines get?
Yeah.
And of course, we have Stephen Hawking, we have Elon Musk warning us about this. You know, if computers decide that the most efficient way to have less traffic on the road is to start killing off humans, is that going to happen? I think it's a little far down the rabbit hole, but I know people are concerned about that. But look, the fact is government are what get in the way of jobs. I believe that humans can work with, robots, and we can't really anticipate what the unintended benefits of having this technology assisting us and how many new frontiers that's going to create for job and a higher standard of living. I mean, look, we're using computers right now to assist us do what we do. Who would have thought that we would be working together, across the U.S. and providing value to the world? I mean, that's an unintended benefit of lots of technological advancements that have happened over time. And I think we need to be open-minded to what the benefits might be as things advance.
Yeah, that makes a lot of sense. Now, excuse me, edit that out for sure. Just getting over something. So tell me though, how are you playing this right now in terms of as an investor? I mean, have you found some interesting plays? I mean, there's not. Are there specific stocks you're looking at, companies you're looking at? How do you even get exposure to AI if it's such a significant technology on the horizon?
I'll be honest with you. I haven't exposed myself yet to any artificial intelligence company, but it's just something I'm doing more and more research on, and I'm sure that's something I'll get exposure to. But one of the things I can tell you is this is a trend, and I believe it's going to be big. And I mean, something off the top of my head I can tell you is driverless cars.
Yeah,
that's the number one job in the U.S. It's probably close to the number one job in the rest of the world as well, is a driver. And what's going to happen to all these displaced humans when there's no longer a role for them to drive a car? I guess that's more on the negative side, but I mean, the companies that are at the forefront of this, I'm sure, will be poised to thrive. And the companies that provide the data information and the internet connectivities and all of the ancillary businesses that go on with driverless cars. I mean, who knows how many opportunities are just going to be surrounding that one event. And then how important will that be for mitigating traffic in our big metropolitan cities if cars are not crashing into one another? Right. And all of a sudden now someone who wants to live only, or who would only live 15 miles away from work can now live 30 miles away from work because the freeways now move, Yeah. So, there's just so many unintended benefits.
So, Ken, tell us all a little bit about Crush the Street. How long have you been doing it? What is it all about?
Well, I started it in 2010, officially in the newsletter business. We started Future Money Trends. And then a year later, we started crushthestreet.com. And it was birthed out of the financial crisis of 2008. Similar to Bitcoin in a sense, it was the problems that happened, explaining that to people, the distortions in the economy, the problems with just reckless debt, and wanting to share how to be financially prudent and to be in front of trends and to just, have a community where we can communicate with one another, share ideas, and thrive together, because that's what it's all about.
Right.
We have a limited time here on Earth, and it's all about maximizing our time. It's not about burying ourselves in a hole and preparing for the end, but it's about how do I make the best and the most out of the right here, the right now.
So you have a newsletter and then a blog, and how do you sign up for those? How do you get access?
Sure, yeah. If people want to sign up, they can go to crushthestreet.com, sign up for the mailing list. You could also visit me on YouTube at Crush the Street. We got a YouTube channel where we interview different people in the precious metal space, crypto space. You've been on my show before.
Yeah,
that was a great podcast. And yeah, so people can follow me there, and we're on Twitter as well at Crush the Street.
And it's a podcast as well, obviously, and you can Future Money Trends is the podcast.
Just Crush the Street.
Crush the Street. Got it. There's sort of there's sort of confluence of these brands a little bit there. Anyway, well, listen, Kenneth, this has been really good. Great talking to you, and thanks again for being on the show today.
Thank you, Buck, for having me. Come back anytime. I really enjoyed it.
We'll be right back. Welcome back to the show, everyone. Hope you enjoyed that discussion. Now, another announcement I want to make is, again, I want to point out that wealthformula.com has got a cool new website. This website was actually designed by Phil Chan. Phil Chan is my only employee in Santa Barbara. I've got lots in Illinois, but he's the only guy who's in Santa Barbara, and he is a very, very talented young man. Anyway, he built this website, and it's cool. One of the cool features about this, by the way, is this feature called SpeakPipe. SpeakPipe is something that is going to allow you to record messages for me. So here's what I want you to do. I would love for you to ask your burning questions on SpeakPipe. I'll record them. Well, Phil will record them because I don't know how to do it. And we will play those questions as long as, there's no profanity, etc. And we'll play those questions and I'll give you live answers. So definitely check that out. Go to wealthformula.com and where is it, Phil? Where is it? Is it on the bottom somewhere? Yeah, it's on the bottom somewhere. The what section? The Ask Buck section. Of course, it makes sense to be on the Ask Buck section. But now you don't have to write a letter or, print something out. Just say what you want to say. And I'm going to assume, by the way, that if you ask a question, I can play it on the podcast. So if you don't want to be on the podcast, don't record it, okay? And anyway, that's it. That's big news, though. So check that out at wealthformula.com. Also, one last note. Again, the economy's hot. We're going to start getting in some deals in Investor Club pretty soon. So if you are an accredited investor and you have not signed up for Investor Club, or if you have signed up for Investor Club, but you have not made an appointment to speak with me, you need to do that soon, because in order for you to get involved with anything I'm doing, for a number of the deals that I'm doing, you actually have to speak with me and get to know me a little bit. And that's all part of the law that we follow. Anyway, that is it for me this week. This is Buck Joffrey with Wealth Formula Podcast. I will see you next week.